Can you actually live from trading? This is one of the most common questions in the market, and also one of the most misunderstood. Most people ask it the wrong way. They ask, is it possible? When the real question should be, under what conditions does it become possible? Because trading is not a salary. It does not pay you for showing up. It pays you for consistency over time, and that distinction changes everything. Welcome to the Phantom Trader world, where clarity comes before execution. Many people imagine trading income as something stable and predictable, a fixed amount every day, every week, every month. But trading does not work in units. It works in distributions. Some days produce nothing, some days produce losses, and some periods carry most of the results. This is why the idea of living from trading cannot start from daily profit targets. It has to start from structure. Professional traders treat trading like a business, not like a paycheck. Every business has costs. Every business has uneven cash flow, and every business needs reserves. Trading is no different. Before income comes stability. Before stability comes survival. This is why most traders fail at the transition. They try to extract income before the system has proven itself over time. They move too fast. Living from trading does not begin when you make a good month. It begins when your results remain stable across different market conditions, weeks that perform well, weeks that do not, months that move sideways. The question is not, how much did I make? The question is, how does my system behave over time? Another mistake is ignoring drawdowns. Every equity curve contains drawdowns. They are not a flaw, they are part of the structure. If your lifestyle depends on trading, drawdowns become pressure, and pressure changes behavior. That is why professionals separate capital. They do not rely on trading profits to cover immediate living expenses. They build buffers, a buffer outside the trading account to cover life, and a buffer inside the account to absorb variance. This separation protects decision quality because trading under financial pressure turns small losses into emotional events, and emotional trading does not scale. Living from trading is not about hitting a number. It is about managing variability. Most people focus on how much they want to earn. Very few focus on how much inconsistency they can tolerate. But tolerance for inconsistency is what determines sustainability. Another important truth is that income extraction must be conservative. Professionals do not pull all profits from the account. They allow capital to grow. They protect future performance. Income is taken gradually, based on long-term averages, not short-term success. This is why trading income feels slow at first, because it is earned after proof, not before it. Can you live from trading? Yes, but not quickly, not emotionally, and not without structure. Trading becomes a viable income only after it becomes boring, when execution is repetitive, when results are expected, not celebrated, when losses no longer feel personal. At that point, income becomes a byproduct, not the goal. Living from trading is not about freedom from work. It is about responsibility for outcomes, and that responsibility is what separates traders from dreamers. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.